In a riveting wake-up call, the chief of A Black Swan fund has issued a resounding warning about the perilous levels of debt, lambasted the Federal Reserve's jeopardizing impact on financial markets and the U.S. economy, and passionately encouraged individual investors to safeguard themselves by embracing Warren Buffett's straightforward wisdom. The words of Mark Spitznagel, the mastermind behind Universa Investments, cut through with urgency, declaring that our present reality is that of an unprecedented credit bubble, an era dominated by leverage and credit, with imminent consequences that cannot be ignored. The distress signal raises questions of our readiness to navigate this treacherous terrain. Are we headed for a financial storm, and are we prepared? Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button. Leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. In the heart of the financial landscape, a seismic warning bell is ringing, its echoes resounding through the corridors of economic thought. Mark Spitznagel, the visionary architect of Universa Investments, renowned for its unique approach to mitigating unforeseen and extreme risks, has stepped into the spotlight to cast a stark light on a peril that has been steadily escalating. This is a time, as he asserts, where humanity finds itself treading upon the precipice of the largest credit bubble to ever shape our history. It is an age ensnared by the allure of leverage, a dance with credit that is irrevocably bound to deliver consequences. With an intensity matched only by the gravity of his words, Spitznagel speaks of a future shadowed by the towering specters of household and federal debt, a precarious realm where the costs of borrowing threaten to lock economic growth in shackles, compelling governments to curtail spending, and compelling central banks into a reluctant embrace of persistently low interest rates. In the face of a global pandemic, the Federal Reserve's response, marked by the slashing of interest rates to nearly non-existent levels and the acquisition of unprecedented volumes of bonds, has incited both rescue and turmoil. While perhaps delaying the onset of a recession, it has simultaneously inflated asset valuations and debt thresholds to heights that defy comfort, setting the stage for a looming catastrophe of magnitudes unseen. Drawing an analogy with a tinderbox awaiting a spark, Spitznagel paints a vivid portrait of an economy saturated with vulnerabilities, its potential for conflagration lurking beneath the surface. The Federal Reserve, he suggests, has donned the role of firefighters, dousing small sparks with haste, inadvertently accumulating fuel for an inferno that could ravage with far more ferocity. Amidst this backdrop, the echoes of caution are particularly resonant for stock investors, whom Spitznagel regards as ensnared in a web of complacency. The rallying cries of declining inflation, unwavering corporate earnings, and the symphony of technological marvels have eclipsed the shadows cast by overinflated equities and the latent perils they bear. In this crescendo of caution, Spitznagel directs our attention to a beacon of assessment championed by Warren Buffett, a barometer aptly known as the Buffett indicator. This compass, in its unwavering honesty, reveals the overextension of valuations, a testament to the market's fragile state. Yet, amid the clamor of uncertainty, there emerges a lifeline. Spitznagel, drawing from the timeless wisdom of Warren Buffett, implores individual investors to forego the temptation of wagering against the currents or amassing stores of safe haven assets like gold or U.S. treasuries. Instead, he offers a different route, one carved out by the virtuoso of investing himself. Buffett's age-tested counsel resounds: invest in a low-cost, diversified index fund such as the S&P 500, a strategy he has vociferously endorsed. And so, in a landscape fraught with trepidation and promise, the words of Spitznagel resound. The currents of credit and leverage that have sculpted our age remain poised to deliver their verdict, and the choices of today echo into the tapestry of tomorrow. As we stand at this juncture, perhaps the question that haunts us is not whether the storm will arrive, but whether we have heeded the warning signs and set sail with the wisdom they offer. Amidst the currents of uncertainty, how do you perceive the balance between heeding caution and embracing opportunity in today's intricate financial landscape? Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.